People would say, why are we doing that? Why does the UK government want to support overseas borrowers? The reason we do that is because there needs to be a level of UK content going into those projects. So this is a way of getting the UK supply chain into those projects overseas. So we demand that at least 20% of that project is sourced from the UK.
Welcome to Trade Treasury Payments, the podcast unlocking the future of cross-border finance.
From transaction banking and money movements
to liquidity, treasury, and cash management.
We bring you expert insights and the latest trends shaping global finance. My name's Dipesh Patel, editor at Trade Treasury Payments. Today, we're turning in to the UK. We're looking at UK exporters, UK SMEs, and how to boost UK trade. And I'm joined by none other than UK Export Finance's Carl Williamson, who is Director for SME and the Trade Finance and the co-head of the business group at UKEF. So UKEF is the UK Export Credit Agency. Carl, welcome to TTP.
Dipesh, very delighted to be here. Thank you for inviting me.
Thank you. So give us a bit of an overview. Tell us a little bit about yourself, what you do and what you're up to at UKEF these days.
I've been at UKEF for 6 years after spending 30 plus years in banking, so a bit of a change from private sector into public sector. You mentioned my very long job title, but fundamentally I look after the part of UKEF that supports UK exporters looking to access finance where the private market can't help. So we do that through a number of schemes, guarantee schemes, insurance schemes, and it's mainly supporting SMEs, but not solely. So about 90% of what we do are SME businesses, but we can support any size of business. I have responsibility for a business development team, an underwriting team, marketing team, with a whole focus on trying to get the message out there about what UKEF can do, how it can support customers, UK exporters, how we work with our stakeholders, and that's principally banks and non-bank financial institutions. And really just to ensure that UK exporters are getting access to finance and seeing how we can help them on their export journey.
Thank you very much. And actually, just before the formation of Trade Treasury Payments in March this year, the UK government increased UKEF's total capacity by £20 billion, bringing that total up to 80 billion. So quite a big jump. And UKEF supported 14.5 billion in exports last year, which was a record. Where is this capacity boost going and how's it being used?
It's already being used. So as you rightly mentioned, you stole a bit of the thunder. We have increased by 20 billion to 80 billion capacity. And you're absolutely right. Last year was a record year for UKEF in terms of 14.5 billion of support. So we're already using a lot of that capacity. A lot of it went into defence. There was a couple of large, very defence-related transactions, but it's also there to support lots of other sectors. We've done lots of other transactions globally. It's also there to support those smaller businesses as well. We also had a record year with a number of small businesses that we supported. We actually helped over 650 customers last year. The vast majority of them were SMEs. And that helps support 70,000 jobs across the country. The capacity is really there to try and help drive those growth areas, and particularly where the government has recently announced around the industrial strategy and sectors identified within the industrial strategy. So, for example, clean growth, life sciences, advanced manufacturing, automotive. All sectors that we've traditionally been fairly strong in, but I think government wants us to operate even more in. However, we shouldn't just say it's just the industrial strategy sectors. We are across all sectors and we're across all parts of the country. It's worth saying where our support also goes. It isn't just London-centric. Just over 83% of what we do is outside of London. So really reaching into the far corners of the UK and helping. But I would say we are sector agnostic and therefore this support is there just to help us grow and see those opportunities for growth that we think there are right across the UK.
Can you give us a bit of an overview of the core products that UK Export Finance offers? Because I know going back to the kind of mandate is that no viable UK export should fail for lack of finance. So tell us a bit about the products that you offer, and are there still cases that you're unable to support otherwise strong export opportunities?
It could probably take me the whole of this podcast to go through all our products, but fundamentally we provide guarantees to financial institutions. We do some insurance as well, but our main products focus on us providing guarantees to financial institutions to enable them to lend to their clients. Now, there will be a number of different products depending on the size of business and depending whether they're in the UK or overseas. So traditionally, our overseas product is something called buyer credit. This is where we're supporting financial institutions lending to corporates or sovereigns overseas, not solely, but mainly developing markets. People would say, why are we doing that? Why does the UK government want to support overseas borrowers? The reason we do that is because there needs to be a level of UK content going into those projects. So this is a way of getting the UK supply chain into those projects overseas. So we demand that at least 20% of that project is sourced from the UK. So we do lots of that, and that's very traditional export credit agency business. On the UK exporter side, probably two principal products we have: the general export facility, which really helps SMEs and mid-corporates. It is up to 80% guarantee that we give to banks, and it enables them to provide working capital solutions to their clients. It's a very flexible product, and it's probably our biggest product by volume. The bigger version of that is our export development guarantee. Very similar again, up to 80% guarantee, but that is mainly used for capital investment projects. So, for example, building out a gigafactory in the UK, where there will be an element of export at some point. We will help provide the funding to get that factory infrastructure built to enable exports to happen in the future.
Let's talk about defence. Obviously, there's been a huge increase in support for defence exports. How would you balance that with UKEF's commitments towards green growth, SMEs and some of those newer industries like clean tech?
So I think the fact that we got that additional capacity does mean that actually we can look across all of those. So there isn't one that we need to sort of say, right, we're only going to focus on defence or we're only going to focus on SME. It enables us to really look across and say we can support all of those activities. So actually they're not dependent on one another. We can do clean growth, we can do big defence deals, we can support SMEs. So I don't think that really matters. We're joined up in that we can look across all of those sectors rather than just thinking we can only focus on one of them.
Is there not a risk that you then skew a bit more heavily towards some of those large ticket deals and well-connected exporters though?
There's always that risk, and we monitor that. We look at concentration risk. We will look at who those borrowers are. But clearly some of those borrowers are some of the biggest and most valuable export companies we have in the UK. So some of the defence companies and the supply chain is so vital. It supports hundreds of thousands of jobs. So yes, there is, but there's a great opportunity, for example, in the UK defence sector to really grow out. We know there's more demand across Eastern Europe in particular, Middle East, around sourcing more defence capability. And the UK is well primed for that. We have fantastic companies who can go into that supply chain. And therefore, yes, there's always a risk that you concentrate in one area, but I think we try and balance that. And as I say, the book is well balanced in that we are supporting, as I said earlier, hundreds of SMEs. So we're really making sure that we're going at the bottom end, but we're also doing overseas projects still. And we're still doing these projects for clean growth, building out gigafactories, as I said, supporting the automotive sector. We've recently done deals with 3 of the large UK automotive manufacturers. So we really do vary our support across all sectors.
Thank you. I think that was following the government announcement back in March of a 2 billion increase in UKEF's lending capacity specifically for defence. And some of those big major deals include Ford's UK £1 billion loan guarantee. Let's go back to your annual report. So it shows an increase in capital spending and risk exposure. Carl, what's driving that shift and how are you managing the risk, particularly in volatile global markets?
I think the increase actually just reflects the record-breaking year we had and expanded capacity. So the fact that we've increased capital spending is a reflection of what's coming through at the moment. But managing and mitigating risk has always been a core function of what we do. in the end, we are managing public money. We are a government department, so we're very wary that we also want to be managing risk properly. We are also very wary that we need to price our risk appropriately. We do state that we operate at no net cost to the taxpayer, and we do that by pricing our risk and monitoring pricing of our risk on a transaction by transaction basis. So we know we need to be very focused on that. The other thing we do is we constantly review our country limits. So we are looking all the time at where there is instability, where there is global economic issues. So we are looking across all of our book all the time to make sure that we have the right country limits. And sometimes we'll want to increase them. Sometimes we'll see opportunities in certain markets. So we will talk internally with our colleagues in HM Treasury about getting increases in those country limits. But we're also very wary that we have a responsibility as a government department and to taxpayers to ensure that we are monitoring that risk correctly.
So you do adjust your risk tolerance as markets become more volatile. So when we see sanctions regimes, FX volatility, sovereign debt concerns.
Absolutely. So we will always monitor that risk and we will always adjust if we need to. So we're very keen that if we see a situation where there is instability, that we can react to that. We are also very careful that we don't do any funding in sanctioned countries. And we'll also look at sectors that we may not want to be in. For example, in 2021, the UK government said that it would have no more dealings in overseas fossil fuel projects, and we don't do any of that now. So we've stepped away completely from overseas oil and gas activity. So again, we're always looking at what government policy is, what's going on globally. We have a whole team that looks at country risk. And if we need to amend it, then we'll do that.
Hey, enjoying this podcast? Hit that follow button for more. Done? Let's get back to it. So let's talk about accounting treatment, because that's been a big theme of 2025. And from April, you announced that you'll adopt IFRS 9 for nearly all of your contracts, replacing some of the current kind of bespoke models. And IFRS 17 was considered but rejected for most products. Can you talk a bit more about how you'll assess or report financial risk, and does that affect the way that you structure deals for your SMEs?
So, look, very short answer, as I'm not an accountant as well. A very short answer is essentially IFRS 9 just changes the way we account for our activities. Mm-hmm. It's not going to change anything we do about how we manage risk or how we're going to originate and structure deals. So it is a purely accounting measure. We won't be changing anything we do in terms of, as I say, how we look at risk. And yeah, it's going to have no impact at all on how we look to originate and structure deals.
Okay, sounds good. Newable. So some non-bank lenders have paused activity under UKEF's general export facility. Are you able to talk a bit more about what happened there and what impact does this have on SME access? How are you addressing gaps in non-bank financing?
So,
I had to tell you I was going to ask you the difficult question.
I know, and I thought Newable might come up, and you said lenders, well, it's one lender. So Newable, you are right. We are no longer undertaking new transactions with Newable. They made that decision to off-board with us, and you would need to speak to them about their reasons for that, etc. However, we maintained a good relationship with them. Any transactions that are on the books at the moment with Newable, we continue with those. So we'll continue with them until expiry, and we still work closely with Newable to ensure that they are meeting the client's needs in respect to those ongoing transactions. But yeah, of course, it has created a bit of a gap. So what are we doing to sort of fix that gap, if you want to call it that? Well, we still work with 12 other lenders, and we still have enabled lots of SMEs to get access to finance. However, we're not satisfied, and we are always looking for new lenders to come on board. Whilst I'd love to give you the details today, I can't. You'll soon find out, but we've got 2 new NBFIs who are about to be onboarded, one which is significantly larger than Newable and will probably undertake more transactions. So that's a real positive for us, and a positive that the general export facility, the ones they're signed up to, is still a product that NBFIs and other banks want to be associated with. So yeah, we were disappointed what happened with Newable, but as I say, to give them credit, they've continued to support those existing clients through to the end. And we should also say that it isn't just product partners. So, as I mentioned earlier, I have a business development team, export finance managers, they're called, all around the UK. And they're also very skilled at touching in with brokers and other funders who may not be on our schemes, but can find solutions for SMEs. And we do a lot of those transactions where we introduce SMEs to third-party financiers. We have other ways of helping SMEs, not just directly through our schemes.
Because what is your review since the launch of the General Export Facility, specifically for those sub-£1 million deals?
I think Export Facility has been what we would term as a game changer in terms of how UKEF is operated. We were supporting 100 SMEs 4 years ago. We're now supporting nearly 600 through the scheme. So the banks have really taken to it. As I said, we've introduced a number of other lenders. We have 12 lenders now. However, it doesn't suit every SME. And you're right, below that £1 million lending mark and probably below a £10 million turnover level, some banks still struggle. So what I can say to you today is we are looking at product development at that level. There will hopefully be some announcements over the next coming months about what we're going to do there. We believe there is still a bit of a gap. So you're absolutely right to identify that. And we think there is something we can do at that end. And as I say, you'll probably hear more about that over the next couple of months. So we are not satisfied with just supporting 600 odd companies. We want to be supporting more, and we think there are more at that lower end that we can support.
Are you happy with the operational capacity and delivery at UK Export Finance in terms of as you grow, so do your operational capabilities? How do you ensure that exporters using various UKEF facilities are experiencing frictionless onboarding, no delays, automated systems, if that's what's going to help move the dial for them?
Really good question, because I would say in the past, it's certainly been a perception that UKEF can be slow to respond and that it takes a while to get approvals. We've done a lot of work with the banks and our finance partners over the last 3 or 4 years around a delegated model. So we do delegate our main products to the banks, and particularly the General Export Facility. And what we also do is we give them a delegation limit. So it will vary by bank, but the big banks, the 5 high street banks, they have up to sort of £10 million per obligor. So what that means is if they meet all of our criteria, we don't have to underwrite the transaction. So they get automatic approval, which does mean that for a UK exporter, they go along to a UK bank, they get our support, they're only going through the credit process with their bank, not with us. And about 90% of what we're doing now is automatic delegation. So the 10% will be those much bigger transactions, those 20, 30 million pound transactions, which probably do need our oversight again.
As I mentioned, they do make the overall volume number.
Yeah, and they do make the overall volume. But of course, as I mentioned earlier, we still manage taxpayers' money. So there has to be some oversight at some level. But as I say, 90% is what we're doing. The other thing is that we also provide insurance. We recently launched under our credit insurance policy 2 key things. One is we basically got online with the application process. So up until 6 months ago, people had to complete a PDF. Now they complete online and they complete an online application, much simpler. They also get a price checker, so they can also check pricing before they submit an application. And the second thing is we launched something, a variant of our credit insurance called the Small Export Builder. And that enables very small companies. So previously, whatever size of credit insurance you wanted from us, you had to go through an underwriting process. What we've decided is that if you start off below 25,000 cover, we won't look at the end buyer. So we used to have to review the end buyer and make sure they were credit worthy. We don't do that now. If it's a first time under 25,000, you want to export to that end buyer, we don't do a check on the end buyer. We do financial due diligence, but that's it. And you'll get cover up to 25,000. Then we will incrementally increase that each time you trade with that buyer by 50%, all the way up to 100,000. You won't have to have any underwriting. So we're doing it against the trading activity. So if you get paid, you can come back and approach us for another 50% on top. You get paid again and keep going and going up to 100,000. So again, we're trying to find ways just to make it easier for particularly small businesses to trade more easily with us.
How's the uptake been?
Really good. It was only launched 2 months ago, but we're already seeing good volumes coming through. We will be doing a bit more marketing and activity around it, particularly now we've done a few, so we can get a few case studies out there and start showing how the small export builder really works.
Well, let's take more of a forward-looking view. Where do you see, Carl's, the biggest opportunities, given everything that's going on in the world, all of the various challenges and risks, because UKEF is particularly exposed to global macroeconomic risk, and I guess according to OECD guidelines, that's where UKEF has to stand up and grow and support UK's SMEs. So where do you see the strongest growth potential, and how is UKEF positioned to adapt that over the coming, call it 12 to 18 months?
I'll start off by saying, obviously I've mentioned a couple of the opportunities. Defence is a huge opportunity. There's sectors within the industrial strategy. There's a lot of focus there. There's been a trade strategy as well. So there's lots of areas where we think we can work with other government departments, where we can work with the private sector on those sectors that have been identified. So there's definitely opportunity there. We still see huge opportunity in the SME market in terms of, as I talked, we think there's a gap there. So there's massive opportunity to help smaller businesses. The third one, I think, is around what we term as inclusive trade. And this is helping more women and ethnic minority-led businesses get access to finance. We see a huge gap. There are proportionally less women, less ethnic minority businesses exporting than white male businesses. And we don't really know why. That's just been a traditional thing. We do think that they struggle to get access to finance. We know there's probably a level of discrimination maybe, but we are working with the private sector to try and, I'd say fix it, but see how we can help in that area. So that's a core objective for us, is around increasing the amount under inclusive trade. So those three areas, and then they fit into our wider business plan. So we launched a business plan just over a year ago, 5-year business plan. It's got 5 core objectives. We want to support UK firms to win over 12.5 billion of export contracts. We want to increase the number of SMEs that benefit, as I said earlier, from our support. We want to drive growth inclusively across the UK. So again, touching into what I've just mentioned, position UK exporters at the heart of the low carbon transition, and also use our finance to create positive impacts for communities both here and overseas. So really helping in those developing countries. So that's where we see the opportunities, and lots of them. Risks, you've mentioned a couple, the macroeconomic environment. Obviously, we've seen what's happened with tariffs. There's obviously concern within the whole business community around what's happening economically, globally. So they are the risks, and they come back to us really being careful of how we monitor, manage and mitigate the risks. And we're always focused on, yes, we want to grow and we want to look at those opportunities that I talked about, but we also are very wary that we want to do it in a manner that we make sure that we are mitigating any risk around that. So we've always done that. We've been around 106 years, and our model hasn't really changed in that respect. So we'll continue to do that. And we'll continue to adapt, and we'll continue to sort of make sure that we are adapting to market conditions.
What's your piece of advice to, say, a new UK exporter? They're entering a market at a time when defence might be at the top of their mind, leveraging opportunities in emerging and developing markets might be at top of mind, and also utilising new technology. For those exporters, UK-based, what pieces of advice would you give to those just starting off on their export journey today?
Honestly, come and talk to us. It sounds a bit obvious. Not just us, but there are people within the Department for Business and Trade. Seek out government support. There's lots of it. I mentioned we've got export finance managers based all around the UK who can help you on that journey. We also have people in country, as do the Department for Business and Trade. So if you're looking at new markets, we can help you there. We can help you talk to buyers in those new markets. We can put you in contact with people on the ground. There is a wide level of support. And I'd also say there's a wide level of support in the private sector, whether it's, I'm talking to you today, Bhupesh, and you're involved heavily in this area, but the banks, chambers of commerce, trade organisations, there's lots of support out there. Exporting can sound scary at times. It can sound like there's lots of challenges, whether it's tariffs that we've talked about, whether it's language, culture, how do I get my money back? How do I pay for something? There is loads of support out there. And if you come and talk to UK Export Finance, we can point you in the right direction if it's not us. So yeah, it's always my advice to any export that just seek out advice. You'll be surprised there'll be a company just around the corner from you who's doing this, and you can talk to them as well. So there's lots of people who can help.
Thank you very much. That was Carl Williamson, Director for SME and Trade Finance and co-head of the business group at UK Export Credit Agency, UK Export Finance. Carl, thank you very much for joining us at TTP.
Thank you very much.
And don't forget to follow Trade Treasury Payments
on your favorite podcast platform.
Thanks for listening.